Beep, 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 beep. Now a special edition of Macro Dashes with Kirk Spano, September 29th, 2022. Hello, everybody. So I got called into grandpa duty yet again. Enjoyed it. We went to breakfast at a nice place. We have figured out how to order for the kids. Don't order much and order a lot of fruit. Blueberries, strawberries, and grapes in particular. We also went to the museum, check out the butterflies. This must be an end of the season butterfly run because there weren't many people at the museum. So I think the butterflies were pretty free and easy, and they were everywhere. So the two grandkids, Jolene and I, we took in, there had to be 1,000 butterflies in there. So the kids were pretty fun. We ran through the rainforest, and about halfway through the rainforest, an exhibit in the museum, he looks up to me and he goes, "Hug." And I picked him up, and he pretty much fell asleep right there. So Grandpa wins again. So what's going on in the world? Well, we have Florida getting hit by a pretty massive hurricane. So anybody that's there, I hope you are taking care of yourself. Be very careful. I hope you have some water, and hopefully everything blows out back to sea as quickly as possible, and that you don't have too terribly much damage. But by all estimates, this is going to be one whopper of a damaging storm. So stay safe, and the stuff will get repaired because there's definitely insurance for most of it. And I'm sure we're going to get $50 billion from the government to help out. All right. So what's going on in the markets? Well, what was it, a week ago or 2 weeks ago? I said, pause any type of buying. And since then, I think the market's down about 7 or 8%. And we are heading into probably a small short squeeze coming up. The market is very oversold, and there's been a lot of puts purchased, and the price of puts, the price of insurance, has gone through the roof. So in the next, I'd say 2 to 3 weeks, the stock market, although it's going to have a couple of rallies on short squeezes, we're going to see a lot of damage. And there's a couple of things to keep in mind. We are about to go into the buyback blackout period through middle to end of October. And we're going to get a lot of forecasts from companies that are going to start revising their forward outlooks to the downside. They're going to take into account the new taxes, which should shave a few percent off of the S&P 500 earnings. Certainly won't be 15%, but it'll be some single-digit percentage of earnings will be shaved off of the S&P 500, largely from the QQQ stocks because they make the most money. We are also going to see a lot of kitchen sink quarters. I think you're going to see a lot of companies where the share price is already down for the year. The CEOs are going to get lower bonuses as it stands, so they're going to set everything up for a huge year next year. Remember, when in doubt, ask yourself what's good for the CEO bonuses. And what's good for the CEO bonuses is that they just have their kitchen sink quarter coming up. They find a bottom in the market sometime in Q4, whether it's October or November or December, hard to know. I'm going with the market bottoms the first 2 weeks of December, but it very well could be the last 2 weeks of October. So we might get kind of that triple bottom, or one leg down, they'll bounce up, and then another leg down. Remember, November is historically a good month, but December generally mirrors the year. So these are all things that we can keep in mind. I think that the combination of weakening demand, the strong dollar, the cost of inflation is probably going to hit a lot of companies that are multinationals pretty hard. So I don't like a lot of the S&P 500, but you already knew that. I think you're going to see a lot of your companies that people think of as steady eddies are going to get beat up. And a lot of the growth stocks, which so many people have the thesis wrong, are also going to get beat up. You know, the reality is that your QQQ stocks, especially the big ones, the big 10 or 12, are still gushing money, even though companies like Apple recently started to dial back production of the new iPhone. Why? Because demand is a little bit lower than what they thought. People are tightening their purse and their wallet just a little bit. They're extending the period for replacing their iPhone. Like, I think a lot of people are delaying their purchases, not just on phones, but a lot of things. I think people are delaying a lot of purchases. And I think that you're going to see that Q3, and we'd have to double check, might end up being a surprise negative quarter. It's going to be close to zero. So I think all in all, a lot of the valuations that I warned you about over and over again are coming down. And the last thing that has to be adjusted in the PE formula, the price to earnings formula, right? First, the prices come down. Then the CEOs go, well, I'm not getting a bonus anyway, so I might as well readjust all the settings and all the expectations. So then they bring the E down, and then the P has to catch up to the downside. So you're going to see a little bit of a rebound rally just for technical reasons. Might last only a day or two. Could last as long as a week, I guess. But then you're going to see a few bad weeks because of all the earnings announcements and pre-earnings announcements. And then you might see a bad December just because if the year is down, you get your tax loss selling from late November into December typically. And that is kind of a rinse and repeat thing. If you look at all the down years going back to World War II, it's really from about the middle of November to the middle of December that you get tax loss selling. And then you get a Santa Claus rally. Remember in 2018, if you were with me at the time, the bottom of the market was December 24th on a half day. It was a half day in the market, but it was a high volume half day. And the Friday before, I believe, was the 21st. And I told folks, be ready to buy on Christmas Eve. I think I even wrote something to that effect, buy yourself some presents on Christmas Eve. And people didn't want to believe it because it was a horrible, 4 hours that morning or 3.5, whatever it was. But that ended up being the exact bottom in the market. I don't know if we're going to get something that is that clear to me again, but I would say that I am pretty on these things when there's not a end of the world pandemic. And I think that we probably see a pretty good bottoming process into the end of October, probably see a little bit of a reprieve for technical reasons, and then you'll see your last selling off at the end of the year. And I don't know if the selling off at the end of the year, especially those 2 weeks going into the Fed meeting, are going to set new lows or just retest whatever the October lows are. My guess, I'm a double bottom guy. I think it's probably the bottom at the end of October sometime, and then we retest it into December. Then I think Chairman Powell, at least I talk about it in this article, what do I think? My futile forecast, remember slow goes forever. There you go. If we take a look at this here, like the new highlighter, trying to make it easier for people to follow me around. Here's what I think. Remember when I said in March that the Fed was going to hit us fast and hard before backing off in Q4? I still think that's exactly what's going to happen. The Fed is saying, capitulate, reset valuations, or I'm going to keep beating on you. And I think that's what's going on. So this first meeting coming up, not the December one, but the November one, it wouldn't surprise me to see a 75 basis point increase, right? In one scenario, a 75 basis point increase, but then he'll say something along the lines, and we're going to look at the data for December. And if it's still inflationary, we'll raise another half a point and maybe even 75 basis points. So he's still going to want to put the fear of God in people, but he's going to leave that door open a crack, the data. We're going to look at the data. So maybe only raise 25 basis points in December, like I'm hoping, or maybe even no raise at all. We'll see how hard inflation comes down. The problem is energy. And with Russia blowing up pipelines, that's a problem. And with Iran, think that they have the world over a barrel, literally, and not cutting a nuclear deal. Look, if Iran doesn't cut a nuclear deal to allow us and others to monitor them to prevent them getting a nuclear weapon, I'm just telling you, there should be no doubt in your mind that Israel is going to bomb them into oblivion. And they will. They will pick out all the key sites and they will blow them up, and they will probably drop some bombs on places that they think some of the leading mullahs are, some of the leading people in the government are. Because the Israelis, they don't screw around. And if we're not telling them to hold off, they're not going to hold off. So we never even have to give them the green light. We just say, we understand you have to do what you have to do. So either things get better in a hurry, next couple of months, or we get another energy shock. Now, here's the thing. I think that the Federal Reserve is smart enough to know that the energy shocks are close to over, even if there is one more. Production in the United States has been going up. Production in Canada has been going up. Production in Brazil, Guyana. There's a lot of places where production is going up to the point where the IEA says there will be at least another 1.8 million barrels per day on the market next year. Now, if you subtract out 1 million or 2 million barrels from OPEC because of Iran or because of Russia, which have already been accounted for once with Russia, you're looking at needing roughly a flat year on energy use. Well, one of the things to keep in mind is that energy use is becoming more and more efficient. And if Americans turn their thermostat down just a couple clicks this winter, it'll be a big deal. It really is a big deal. I've already set mine at 65 for the winter instead of 69, because if it gets under 70, I want it to kick back in. In my case, I have a whole collection of hoodies that I wear for poker, so I'll be wearing hoodies along with my Adidas pants, which I pretty much live in. I don't suspect, I think I know that you're going to see everything work out on energy. I really do, because they can't take so much energy off the market that it somehow gives them leverage. I mean, think this through for a second. Iran has a couple million barrels a day on the market. Russia has already been cut in half. What is the benefit of Saudi Arabia and the Gulf Council to have extremely high energy prices? What they should do is take any more disruptions and then feed oil and gas into it. And to the extent that you can get more gas out of the United States, which you will, right, and Qatar, that'll alleviate a lot of the problem. In the very short run, unfortunately, we're using more coal, and there is some substitution effect, oil in the place of natural gas, and that's usually happening in oil-producing countries, third world countries in particular, where they already have the oil infrastructure to do it. So a lot of that oil wasn't getting onto the global market in the first place. Remember when I said that eventually there'd be panic pumping and countries with oil would use it in more ways? They will. And that'll be a short window as they also transition but trail the clean energy transition, the decarbonization of the planet. There's going to be a lot of hiccups, a lot of speed bumps. Definitely can be traded in both directions. For our purposes, for the most part, we want to be long all the decarbonization themes. One of them, I had a trade alert today to sell cash secured puts on Occidental Petroleum. Why? Why would I sell puts on Occidental Petroleum? Same reason we did it a couple of months ago. Berkshire Hathaway has now been approved by half of the company, and they have the warrants to buy over half. Berkshire Hathaway is taking over Occidental. There's no question about it. Something really strange would have to happen for that not to occur. So between now and December, we can make 9%, give or take, maybe 10% if you get a good trade on those cash secured puts on Occidental. And the worst case scenario is that you have shares of Occidental put to you, and you have a price lower than what Berkshire can exercise their warrants on. Not a bad deal. So in this volatile market, selling puts on Occidental, and in fact, I do have a limit order to buy some shares of Occidental at 59. I've missed that order like 3 times by a couple cents. So at 59, you're under the warrant price that Berkshire has for exercising on Occidental. I think that if you want something with pretty darn low risk, you buy Occidental 59-ish, or you sell the puts so that you have a net price below that. Now, if you read this article, talked about alternatives to stocks. The cash secured puts, I think, are incredible. We're going to have a huge cash secured put article on Monday. I'll try to get it out on Sunday night, actually, so you can look at it. The volatility right now is so high, and so many people are trying to buy puts that the price of put options is through the roof. You can make 10% on your money through the end of the year and January puts pretty easily. The downside is that you have a bunch of stocks that are already beat up put to you if they get beat up a little bit more. So I think that we're going to get pretty fully invested for all those who are selling cash secured puts by the end of October. I'm going to write a lot of December and January puts. I'll probably write mostly December because I want that cash available to me in the middle of the month. Because if the Fed backs off just a little bit in December, which is the same week that the options expire, I want to have that cash available to be a buyer. So you're going to see a very long list of cash secured puts for December in a couple of days. I'll put it all together after I see the charts. So let's take a look at a couple of the macro charts. What are we most interested in for an ETF? It's QQQ. Now, should it ever have gotten up close to 400? No, probably not. But should it be going down below the level that it is at now? It is clear to me that QQQ is pretty fairly valued right now. When you take a look at the earnings across the board, QQQ at about 270-ish is fairly valued. Now you'll see right here, there was some support. Will it get a little bounce? Maybe, but I think it is destined to get down into the 220s, 230s, 210s. It's going to make a run at 200. Right down in here is a really good buy zone. So I have my limit orders starting at 220. Shooter saying 211, but it could scale in all the way down here from 250. Well, 255 would be where he thinks it's going to get to for sure. Then 247, 237, 226, 211. You know that I wouldn't buy only 4 or 5% apart. If you wanted to buy at 226 and 211, couldn't blame you. I'm going to start buying at 220. If the market starts to get better, I'll just buy, I'll just execute the order at whatever price it is when I decide to execute the order. But I'm looking at 220 for my first scale in. And then if it goes a little lower, it goes down closer to 200, I'll pretty much back up the truck. I just can't imagine it getting into the middle 100s. That would be your Armageddon zombie apocalypse. We'll see. But I think down in here, the Fed just reverses course. Again, the Fed knows all the things that I've told you, right? So Jay Powell and I were sitting at a bar, and he goes, "Hey, Kirk, how bad can I let it get?" And I say, "Well, Jay Powell, drink your whiskey." So, all these things that I'm telling you, and I've been telling you all year, if you've been following since about a year ago, so many things in a row now I've said have been pretty close, either spot on or pretty close, not too much, wrong. Been talking about Occidental for a while. I try to stay away from the fossil fuel stocks just as a matter of conscience, but money's money. Sometimes you just have to say, well, if Berkshire Hathaway's buying it and they're my safety nets, I can live with that. I'm in New Fortress Energy. We're in Ametis. We're in Kinder Morgan. We're not completely ignoring fossil fuels. We're just real careful about it. Where are our margins of safety? Where are the spots where we can say, okay, they don't have much risk? And that's what we're looking for. Why Kinder Morgan over Enbridge, right? Enbridge has those problematic oil pipelines. Why Kinder Morgan over any of the other pipeline companies, right? Kinder Morgan is the number one transporter of carbon dioxide. Carbon capture is a big deal. And what is Occidental really good at? Occidental is the best company at pumping oil out of the ground, out of a conventional well, using carbon dioxide. So when I pick out these companies, I'm not doing it just because, I like Exxon or I like Chevron or I like this company. They've done good in the past. No, I'm getting to know what the real theme is. Why is Berkshire Hathaway really buying Occidental Petroleum and Chevron? The two biggest companies in carbon capture. It's what they are. Otherwise, he could buy Exxon. He could buy whatever he wanted. Why did he pick two companies where the biggest similarity is carbon capture? And why do I think that Kinder Morgan could be sold to Berkshire Hathaway? Man, that'd be pretty impressive to have that pipeline network that's really big in the Permian Basin. Interesting stuff. All this works together, all these pieces. So I think QQQ, a little bit of a bounce here because they're just such good companies. But I think ultimately this little minor support is broken. And we do, in fact, get down in here. Shooter agrees with me. You've seen my SPY chart recently. He's saying the middle 300s for sure. And that's been my target all year. But I've lowered my target to about 300, 310, right around 300-ish. I don't know, a little above, a little below. We'll know as we get closer to the time, we'll know. A lot of the companies in the S&P 500 have not suffered yet. A lot of the old man stocks haven't suffered yet. And what do we know? We know that old men are the most likely to panic. We know that. Every study says so. All the data says so. All the IRS reports say so. And they haven't quite panicked yet. So when some of their companies come out and say, hey, not going to raise that dividend as much as we thought. Hey, we have some growth issues. Hey, we're going to take some balance sheet hits because interest rates are higher. Zombie hunting will really kick into gear. There's 100-ish companies on that S&P 500. I'm telling you, they're zombies. Their skin might not be rotten yet, but from the inside out, they're getting bad. They're getting unhealthy. So the S&P 500 for the indexes is the most vulnerable. 70% of all the cash on corporate balance sheets is in the top QQQ stocks. They make the most money. They have the biggest moats around their businesses. Did it get a little too high? Sure. So did this. So did SPY. I'd rather have the better index. 100 companies is plenty to own. Then you can build around it to get the rest of what you need. Microsoft, I know some of you have a vested interest here. I don't think you have to be in a hurry to sell Microsoft. I'm not sure, but they might be the safest company outside of Berkshire Hathaway. Most recurring revenue. They don't have to build things like Apple does. In fact, if I had to take one or the other, I'd probably take Microsoft just for the super long term. But out of a trough, right, out of a big correction, I'd probably buy Apple, because if people are delaying their purchases now, it means they're going to buy a whole bunch later. Whereas Microsoft revenue is a little bit smoother. So if you want to clean up some of your Microsoft position, you just want to start raising some cash, you're going to get one or two updates here. You could probably set a sell order at 240 to the extent where it wouldn't blow up your taxes. Folks, there's a couple folks that know I'm talking to them. Can Microsoft get all the way down to 140 something? It could. That zombie apocalypse stuff, I don't think it will. I think it gets right into this area. See all that support? So 220-ish, that makes a lot of sense to me. It would be tough to see Microsoft get through this area. Can happen. Absolutely can happen. It's not far away. Then you have these prices right before COVID, which should be 170-ish. And then if we can get as bad as COVID was, and maybe we're supposed to, it is, 2.5 years later though, maybe we could match those COVID lows. We could. Maybe this ends up being a classic round trip, right? Maybe this ends up being a classic round trip. I don't think so. I think it's going to be up here, but we'll see. And that's why you scale in 10% apart, maybe 15 or even 20% apart, depending on whether it's a stock or an ETF. ETFs, you can buy about every 10%. Stocks, 15, 20, even 30%. Big gaps, something that actually impacts your cost basis. All right. So be very careful. I can't find a technical indicator that says we're going to get a sustained bounce. All I'm finding are small bounces that are met with continued selling. So if we get an update tomorrow or Monday, and there's something that you're just dying to trim, you should probably trim it. Again, mind your taxes, mind your asset allocation. And I think that in the next week or two or three, those of you who sell cash secured puts are going to get your chance. And those of you who want to buy stocks because you don't do options, you get some chances. I don't know about all the chances. I really think the stock market's going to try to beg Powell to back off November 1st and 2nd. I don't know that he will. But the way that the market begs the Fed to back off is to just have a holy hell month. A lot of scariness going into Halloween. So I do think that if you've ever been scared in October in the stock market, this might top them all. This might be the scariest month in the stock market, at least going back to the financial crisis. I don't say things like that lightly. I don't. I don't just throw them out there. I'm not throwing mud at the wall. But most of you should have 20, 30, 40, 50% cash. That means that you're going to get some nice low prices. You don't have to be perfect. And with that in mind, if you've looked in the chat room lately, one of our subscribers, his father, used to give a talk.
I was born on January 7th, 1935.
Corporate planning, Vince Lombardi style.
Time of this taping,
what is the quote that I always use from Vince Lombardi? We're going to try to be perfect, knowing that we're not going to get there. But along the way, we might find excellence. And that's what we're looking for. We're looking to be excellent. We're not looking to be perfect. We have a good process. We sold on the way up. We're holding cash. Buy down here. We just need to create a gap between the top and the bottom. And we don't have to capture all of it. And with some of these stocks that we own, Fourth Industrial Revolution, decarbonization, some consumer stocks, different types of energy, we're probably going to do really well when these last couple crises get out of the way. So as long as we don't end the world, I think we're in damn good shape. All right, I'm going to let you go. It's already getting late for me. I think I'm going to go take a nap for the next 10 hours, and I will be with you in the morning in the chat room. So let's see how the start of the day comes. I'll get this up tonight. Take care.